Hi, you're watching Investor Insights, and in this video I'm going to teach you how to build a portfolio of free shares. Now in life there's no such thing as a free lunch. When you walk into a Lamborghini dealership, they don't hand out free samples. So how on earth do you get free shares? Well, surprisingly, it's pretty easy. Now I must stress that this method pretty much only works when the market is going up. If you have a falling market, you don't want to be catching a falling knife. So let's begin. Let's say you have $100,000 and you wanted to build up a nice little parcel of stock XYZ that are priced at $10. Now, you were to spend $100,000 buying 10,000 shares of XYZ. Now, XYZ goes up 50 cents. So you made 5%. Now for this example, I'm going to discount acquisition costs, brokerage and the like. So on $100,000, your portfolio is now worth 105. So what you do is you're going to sell $100,000 worth of your portfolio. So technically, you've made back you've gotten your capital back of $100,000, and what's in your portfolio is $5,000 of shares XYZ. Technically, those shares were free. You don't really have to pay tax on them until you sell them. You don't have to worry about the ups and downs on them because they were free. Technically, if you were to look into it, all your thoughts and all your planning, your strategizing and your execution, those shares are actually a reward for that, or payment for that. But either way, if you were an outsider just looking at what you just done, you've made $5,000 worth of shares XYZ. And this method of trading or investing, whatever you wish to call it, works in up and down markets, but more so in up markets, because all you got to do is buy and sell. In falling markets, you got to short and buy back more than what you owe, and then there's a likelihood that the share could fall further, so your free shares are going to be worth less. And you don't want that. But in a rising market, your free shares, in theory, should be earning you dividends, should be making further capital gains for you. They're an appreciating asset. It's a good thing to have in your portfolio. And regardless of what happens to the stock market, odds are share XYZ was a blue chip company that obviously isn't going to fail. Otherwise, there's no point owning free shares. You might as well have taken the profit in cash. But those free shares you're going to keep forever. And if your analysis of the stock was correct, those $5,000 worth of shares XYZ are going to be making you capital gains for the rest of your life and paying you for the rest of your life. It's a sweet deal, isn't it? And that's how you build a portfolio of free shares.